Fed, the Federal Reserve, if you don't know, announced a 0.25% rate point cut. What does that mean? Is it good? Is it bad? Is it ugly for your 401k? The man with the answers is founder and president of Heritage Capital, Paul Schatz, back with us. Nice to have you as always.
Good to see you.
To make things that are really wonky look a lot simpler. Okay, so everyone's been watching Jerome Powell for the last few months, not moving the cut. Now he finally cuts it 0.25 basis points. What does that mean for you and me?
So in the simplest terms, when the Fed cuts rates, they simply are in charge of the short-term lending rate overnight. That's all they're in charge of. But that sends a snowball going. So the banks cut the prime lending rate. Why do people care? If you have a home equity line of credit, that's going down 0.25 point.
Okay.
If you have credit card debt, that's going down 0.25 point.
Okay.
Short-term auto loans, they're going down too. There'll be a little lag. The banks are very quick to raise them, and they're very slow to cut them.
And they're trying to milk out every last time they can,
There's
right?
no doubt. If you have a 30-year fixed-rate mortgage or a 15-year fixed-rate mortgage,
And that's what we were going to
it's
talk
irrelevant.
about. So
it does not move the needle.
Again, and I like what you said about, especially when you have that home equity loan, because those loans are, the interest rate is flexible. So that's
right.
going to go in our favor. But the longer stuff doesn't just yet. Why not, and what's it going to take?
Because a 10, 15, 20, 30-year mortgage really is set off of the 10-year Treasury note, not to get too wonky. So it's set off of interest rates over 10 years. What the Fed did is just overnight stuff. So all the short-term interest rates will go down in the next couple of weeks. The long-term stuff is set off a different interest rate benchmark.
Well, long term, Jerome Powell is saying that there's a possibility that there's going to be 2 more cuts coming in the short or medium term. Will that lead to better stuff in the housing market?
So now you're really expanding this out.
Well, that's what I do. I do research.
Probably not.
Okay.
Look, not to be a Debbie Downer, because I'm a Dow 50,000 guy.
Yes,
I'm
you are.
super optimistic. But here's the problem. The only thing that's going to fix the housing market is a recession. A recession will reset everything. Look, many of us, my mortgage is 2%.
Yeah.
I did it in November of 2020. And millions of people refied during COVID.
Right.
So why would we leave if we don't have to leave? You need a recession to force people to make decisions.
That's the term golden handcuffs there, where you're tied to your house.
I mean, are we tied?
In a good way.
But who would want to get rid of a 3.5% mortgage to go into a 6, 7, or 8 one?
Okay.
But a recession, sadly, I don't want a recession. I don't want a recession.
And I was going to say, you're robbing Peter to pay Paul.
Unemployment's rising, but we're not close to recession.
Well, let's talk about that. Jobs, they're down. Unemployment slightly ticking upward. Does that equal to problems?
No. As I said, I sat here in January. I always like saying that.
Oh, you do. And this time we have the clip.
Let's roll it.
No, we don't.
I said to Tim, look, I think the labor market is going to weaken but not get weak. We found out from the government a couple of weeks ago that there were 911,000 jobs that they reported were created through March 31st, rolling 12 months, that weren't created.
Right.
There's nothing nefarious there. It's just bad data collection. The labor market, I think, is troughing right now. It's bottoming. I think the economy is about to reaccelerate Q4, Q1 next year, Q2. I think we're going to get more than 3% growth coming. So the Fed's going to cut rates twice more, which they should. They're way behind the curve, as they usually are. But the deregulation, whether you agree with it or not, it's irrelevant. It's here. It's going to give the economy a kick in the rear end.
A little momentum for that.
A lot of momentum for that.
Okay, let's see. Next time you come, we're having the January clip ready to go.
Let's do it.
I swear. Paul.
It's on my website.
Hey, you know what? Listen, at the end of the year, we'll look back and see how good you were, because we know you are, but now you're going to prove it.
You got it. Anytime.
Paul Schatz, always good to see you.